Good morning. I'm Donna Rogers. Thank you, Alan, for that introduction and for sharing some important information with us about TRIO Student Support Services. I'm the director of the Charlton Center for Responsible Investing in the College of Business Administration here at the University of Detroit Mercy. We're so pleased to be partnering with TRIO Student Support Services again for another educational and informative webinar. And we also want to acknowledge a new partner that we have, and that is Wellington Management, a Boston-based employee-owned money management firm out of Boston, with over $1 trillion in assets under management. We were connected to our speaker, Ashley Carew, through Gregory Williams at Wellington. He's a senior managing director there, and he and his team made Ashley available to us. And of course, our thanks to Ashley for agreeing to share her expertise and experience with our listeners today. Before I introduce you to the presenter, though, I wanted to take a few minutes just to share some information with you about the Charlton Center. The center is one of 3 centers of excellence here at the College of Business Administration. It's a newly established program, and we were funded by a generous gift from a very well-known investment professional and an alumnus of the college, Richard Charlton. The program is designed to provide academic excellence and hands-on training for students who have an interest in a career as an investment professional. Simply put, our mission is expand the pool of well-qualified and demographically diverse investment professionals serving the greater good. Our program is unique in that we have an overarching concept and a plan where, because we are a Catholic institution and an institution that observes the Mercy and Jesuit values, we put a special emphasis on ethical investing and socially responsible investing. An important focus of our center, though, is to help to reverse the trend of the underrepresentation of Blacks, Browns, and females in the investment industry. And we want to do this by recruiting and educating and training this demographic so that they can be available to work in companies and corporations and in businesses representing the university and the values and being solidly trained investment professionals. So I'm especially happy to have Ashley as our speaker today, because she does represent that key demographic that we are looking to bring forth and bring into the industry. I also want to acknowledge Dean Joseph Eisenhower, who provides oversight to me in running the Charlton Center, and also to my faculty affiliate, Dr. Omid Shabaji. Today's webinar is the first in a series of webinars that we're doing to share information with you about career opportunities in the investment arena. A lot of times when we talk about investing, we know about traders, we know about stock pickers. We may not know about what an equity research analyst does, or a venture capitalist, or a consultant for the investment industry, or marketer for the investment industry, or a hedge fund person. So we're hoping through future series that we bring to you to share this information with you, and hopefully to spark your interest in having a career in the investment arena. We're pleased and honored to have as our speaker today, Ashley M. Carew. Ashley is an equity research analyst for Wellington Management, and she comes to you with a wealth of experience. She's uniquely qualified to speak with us today, both because of her academic excellence and also her professional achievements. Quickly, let me mention to you that our speaker today received her MPA in 2020 from Harvard. her MBA in 2019 from Wharton. She achieved a MS in 2011 and a Bachelor of Science in 2010 from Villanova. So she's going to share today with you something about her professional journey, as well as important insights to her work as an equity research analyst. Now, after her presentation, we're going to open it up for questions that I'm sure you're going to have. And I'm going to turn it back to Alan at that time, and he will facilitate that part of our webinar. So I urge you to listen attentively, take advantage of this wonderful resource that you're going to find in Ashley, and be prepared to interact with her. Ashley.
Great. Thank you, Donna, for that introduction. And thank you, Alan, as well. It's really great to be here and to be part of this series. So excited to talk to you all and looking forward to your questions. So I feel like the right flow for my sort of introduction to you all of equity research and what I do is just to talk first about what exactly is an equity research analyst, my responsibilities, and then I'll sort of walk through how I got started and provide some other important, I think, context as it relates to what I do. And so I've been an equity research analyst for 2 years at Wellington Management. So as Donna pointed out, I started in July of 2020 in the depths of COVID. So I started remotely, but since have been going back into the office and having luxury of actually being able to interact with people. So typically I would be in the office. And as Donna pointed out, Wellington is a global investment management firm. So we are headquartered in Boston, but we do have offices in other locations across the globe. So we have offices in London, we have an office in Singapore, and Hong Kong. And so we as analysts are also able to interact with the analysts who are in those offices and also visit them in person. And so we are a manager of money, right? And so we manage money for large institutions, such as endowments, pension funds, but also other investment advisors. So they'll come to us and we'll sub-advise for them. And so my role specifically is I research public companies that are listed on the stock market. And then I come up with recommendations to buy, sell, or hold those stocks. And so I'm not sure, some of you may be familiar with what an equity research analyst is, but I also feel like it's important to distinguish between a sell side analyst and a buy side analyst. And so I'm a buy side analyst, and the main differences really are, so one, the type of firm that you work for, and then who you're making the recommendation to, right? And so investment banks are typical sell side firms, and then the equity research analysts that work for the investment banks really publish research and their findings to the broader market. So you could probably go and read and look up, one company, and you could find some published research on a stock that a sell side research analyst would have published. And then the buy side, so buy-side analysts are employed by asset managers such as Wellington and will make recommendations to the portfolio managers that work at Wellington. And we have the ability to actually buy stocks for our clients. So that's the main difference between the buy side and the sell side. Oftentimes people will start at a sell side and then they'll transition to buy side, either just natural progression or they'll go to business school and then go on the buy side. And then the unique thing about Wellington Management that I really like is that we're made up of investment boutiques, which are different teams that have different investment strategies, right? So I'm on the dividend growth team. And so we focus on dividend paying companies, like blue chip companies that are stable, recurring. We look at dividends as a lens to invest in very quality companies. But there are a number of different strategies that you can find other teams will invest in, right? So you'll find growth investors or growth teams, you'll find value teams. So it really spans the universe in terms of the investment strategies and the portfolios that we manage at Wellington. And our main goal, right, is to outperform the market. And that, the term we'll throw around is to generate alpha, right? And that is essentially to outperform the S&P. So if you were to just take your money and invest in an index fund that mirrors the performance of the S&P, right? We want to outperform that. And that's why we're able to charge a fee. And so Another thing about what we do is you can be a generalist or you could be a specialist, right? And so as a analyst, I'm a generalist, so I look at all different industries, but you can also be a specialist, and a specialist will focus on one specific industry or sector. And so it just depends on like what your interests are. I like being a generalist because I get broad exposure to a number of different things. And then there's another term that I think is important. It's market cap, which I mean, I'm sure you guys are probably familiar with that as well, but you can invest along the cap. And so market cap, you know, it's the how big a company is essentially, right? So the number of shares times the share price. And so I focus on very large cap companies. But you can also invest in small cap or like SMID. So it really ranges the universe. But just to boil it down, because I know that was a lot, but I recommend stocks, right? And I help to manage a portfolio. I'm on a small team. And so on a daily basis, you know, what does that look like? It can look like a number of different things, right? So every day could look different, but each day starts out with a morning meeting, and that's unique to Wellington. So it's actually pretty cool because we are made up of small teams. We do get the opportunity to engage in broader firm dialogue. And so every morning at 8:30 before the market opens, we'll all get in one room, and it lasts for a half an hour, but we'll talk about like just activity that we're seeing in the market or what we're doing in our portfolios or what stocks look interesting, so that even if we're investing in different strategies, we still are able to benefit from the perspective or a different perspective of other investors, right? Because we have different strategies, so we're looking for different things. So it's very helpful to hear from other investors what they're thinking. And so that's one thing that's great about Wellington. And then just every day I'm keeping up with the market news. So I'm reading the Wall Street Journal, and then I have a FactSet subscription. Some people have Bloomberg, but just constantly staying abreast of what's happening, especially as it relates to the companies that I cover in our portfolio. So any changes, anything that happens with any of those companies, I need to make sure that I'm communicating those changes to my portfolio managers and also maybe updating other people at the firm on my opinions and views. And so I'm constantly doing research, right? So that's in the title. It's literally just a lot. It's a lot of research, right? So it's looking at company filings, so it's 10Ks or 10Qs. It's looking at the transcripts so every quarter companies will host earnings calls, and so that's when they publish their quarterly numbers. And so there'll be transcripts that will come out that'll have just everything that was discussed, the transcript of the conversation. And so I'll look at those. A lot of companies will publish shareholder letters that are written by management teams. And then other notes that may be published by other analysts at the firm are also very helpful. And then I'll have a financial model for all the companies. So basically, in addition to the qualitative work that I have to do, there's a lot of quantitative work that's required because we'll invest in companies because we like them, but they also have to be appropriately priced, right? And so I'm forecasting what earnings for a particular company will look like, and then what the appropriate price should look like as well. And so in order to do that, I have to continue to update my model. So I'll do that, you know, when new news comes out or every quarter, just constantly reworking my model when things change. And then we also, because we're such a large global firm, we have the opportunity to connect with management teams. So managements of the companies that we hold, so CEOs, CFOs, other C-suite level individuals will come in, and we have the opportunity to host them at different times throughout the year in different meetings, which is really cool because I get to talk with the CEOs, and I've only been in this space for 2 years, but that's a perk of the job, right? Just ask them the tough questions about the strategy. I think it's super cool. There's also conferences that I'll get to go to where I'll engage with other investors. And then lastly is just the constant conversations that we have with others. So there are other, team analysts or other industry specific analysts that I'm constantly engaging with. And so now that I sort of gave you sort of or painted a sort of a broad brush about what I do, I think it would be helpful for me to just walk through how I got here, right? And so I was a career switcher, so I did something completely different from what I'm doing now. Well, not completely different. I work for financial services, but I was not in the stock world at all. So I have a background in accounting, so I am a CPA. I worked at various financial services and accounting firms. So I worked at KPMG, the Royal Bank of Scotland, and Citi, all in the forensic accounting space. So if you're not familiar with forensic accounting, it's essentially investigating white collar crime. And I thought it was cool. I did like the exposure that I got to different companies and industries. And I think one skill set that definitely transferred was the ability to just pick apart financial statements and really investigate and dig, because in this business, you're going to be doing a lot of reading. So you have to be able to synthesize large amounts of information and communicate that information. And I think from forensic accounting, that's something that I really enjoyed, right? But one thing that I realized is that I was getting away from the numbers piece of that world, and I really like numbers. And so I wanted to pivot into something more finance related. And so I applied to grad school. I applied to business school initially, got in. Prior to business school, I went to a panel. And so going to panels is super important to just figure out, hear people talk about their careers like this. I think is super beneficial, because this is how I found out about both of the careers that I've had, right? Forensic accounting and equity research, just through a panel. So there was a panel, it was talking about equity research, and I thought it was the perfect marriage of everything that I liked about forensic accounting, the investigative nature, the due diligence, and then also the numbers piece then that I was missing over a few years, and then also the markets. I've always been interested in markets. And this really is just, you're immersed in the markets. You just live and breathe the stock market every day. And so I thought that was super cool. And then you also have an impact, right? So where our funds are available for anybody to invest in too, so you can invest through other investment advisors or consultants. And so I thought that was pretty cool, because people will put their retirement savings in our funds. So you're actually having a real impact. And then I would say once I got to school, just really double down on just learning about the space. So I did a lot of networking. So that's been super important in this space. I did some stock pitch competitions. So essentially, schools or other organizations will host these competitions, and you'll pitch a stock. And then you're also on a team with other individuals. You'll pitch a stock. And then there's typically a panel of judges, and they'll ask you questions. And it's really helpful because you get insight into, one, how other teams and people are thinking about the stock market. And you're also getting insight into what kinds of questions you'll be asked, what's important, right? And so just getting that real life experience was super helpful for me. So I did a bunch of those. And then I joined the investment management club at school. And so they helped me with preparation, with just a lot of interview prep, a lot of networking, just the do's and don'ts of equity research. And then I had 2 internships, so that was also helpful, and just one, affirming my interest in this space and just getting that real world experience. So people are more willing to take a risk on you if they see potential and they see that you have an investment interest in just learning about the stock market. And then as a segue, what sort of prepared me, or what do I feel best prepared me for this role? I do think it was mainly the competitions that I did. And then another sort of recurring theme that if you are interested in investing and you haven't done this yet is just starting to invest. When I became interested, I was broke. I didn't have any money, so I couldn't really invest. But now you have Robinhood, where you can just invest a few dollars, and that's a super easy way to get into investing. You don't need to have like a ton, $1,000, whatever to invest. You can invest like $10 or something like that, and you can get a fraction of shares if you want, right? So they're making it easier to get into investing now. But also when I started, I just created a paper portfolio. So you don't have to invest in real money, but you can start to think about how stocks work, what stocks you like, and you can track the performance over time without actually having to invest in real money. And then when you're interviewing with companies, they want to know that you're interested. So they're going to want to know in your personal life, like, what do you do that involves the market? Because, when you're in this space, everything that your world that you live in is probably connected to something that you're invested in, right? And so it's just, how does that sort of intertwine with what you do on a daily basis, and how interested are you really in this space, I think is important. And then I would just say some other things, just mentorship and just reading as much as you can. I think that is also something that prepared me for this role. I think if you have a passion for investing, you'll do well. But I think some attributes that I think are important, or that some really successful equity research analysts have, are just one, the ability to be analytical and just have or pay great attention to detail. Because you're analyzing these companies, you have to just understand how they work. Like, different companies will work in different ways, and the market cares about different things. And so just being able to analyze companies goes a long way. Having an opinion and just being an independent thinker. So at a point that I brought up earlier, anybody you can invest through index funds, right? And generate the average return of the market. But in this space, you want to outperform the market. So you have to be able to think differently, which isn't always going to be easy when you have like a different opinion from the general market. So that's something that I think is important in this space. Okay with being wrong. So you're going to be wrong a lot. They say the best investors right about 60% of the time. So you have to just be okay with that and learning from your mistakes, and then honing your process as you see fit. I think I've made a ton of mistakes, but each time I make them, I just get better. Curious, so asking questions, right? A risk taker. So I'm a little bit more on the risk averse end of the spectrum, which is why I like stable, slow growing compounders. But you have to be comfortable with taking some risks in this space, because no risk, no return, essentially, right? So you gotta take some risk. And then just a good communicator. So because you're constantly you're recommending stocks, so you need to be able to communicate and sort of articulate what your thesis is and why you like a certain stock. And I know probably past 15 minutes, but I guess I'll just two things before we could talk about, or we can, I'd be happy to take questions. But just want to highlight just two things. Just one, what I like best and what I don't like so much, or what I like the least about my job is, I would say the best thing about my job is the autonomy. So just the ability, and as an accountant by trade, someone who grew up in accounting and did that, I thought that I liked operating in very like black and white spaces, and I was very uncomfortable with gray. But in this world, there's a lot of gray. But I like that. I like the autonomy. I like being able to be creative. It's very entrepreneurial. You do your own thing and you come back as a team and you discuss, right? So that's I think that's super cool. And then I like working with very smart people because I'm able to learn from them. But they're also very humble and they're willing and very generous with their time. And I like that. And then I just like that I'm getting paid to learn, which is really cool, because you go to school, you're not getting paid, but then you work here, you are getting paid, right? So I think that that's super cool. And then just what I do is so topical. Everybody's talking about current events, and I'm doing that for a living. I'm supposed to be the person that knows what's going on. And so at the dinner table, when people are talking about the war in Ukraine, like I have insight into how that's impacting the markets. And so I think that that's really cool. And then I just think the last thing that I'll say before I'll take questions is just the pieces of advice, and I sort of touched on them earlier, but I would say first is the honing your technical skill set. So I think that's something that I still continue to work on, but the earlier you can develop your technical skill set, so the modeling just the understanding of financial statements, it goes a long way because you'll have training if you start out earlier. But when I came in, there wasn't as structured of a training program. So it's definitely, you definitely have to make sure that you understand how financial statements work, and how that translates into what makes a good investment or not. And then just network, is second. And then the portfolio, just paper portfolio or invest now, just start now if it's something that you're interested in, you haven't already done it. And I'm not talking about like the meme stocks or the game stocks and that kind of investing or like day trading, but actually investing for long-term growth, right? So what companies do you like that are gonna generate returns over the long term? And then just read as much as you can. There's so many great books. And so I'm gonna send an email with the books, but the books that I think are helpful are 5 Rules for Successful Stock Investing. It's Morningstar's Guide to Building Wealth and Winning the Market. That book was like so instrumental in just helping me to understand the basics. The Little Blue Book of Investing by Joel Greenblatt, that's also super, it's a very easy read. And he just breaks down just the important things to know when it comes to investing. Investing for Growth by Terry Smith is another great book. And then The Intelligent Investor, which is like the investing Bible that everyone should read as an investor, it's just good to have. It's pretty long, but it's good to have in your back pocket if you ever need to reference anything. And then the last thing, a forum, Seeking Alpha. It's where a lot of just like retail investors or people who have been in the industry for a while, they'll submit their thoughts on different companies. And it's not professional advice, but it's just helpful to see how other people are thinking about the markets and like what things you should be paying attention to. So I would regularly look at Seeking Alpha when I was going through my recruiting process. Just again, it's not professional experience, but it's just how are other people thinking about it. So we'll just leave you with that, and then happy to take any questions.
Thank you, Ashley, for that. So yeah, if you guys have any questions, please, you can use the raise your hand feature, and then I'll allow you to come off mute, or you can add the questions to the chat.
Alan? I don't know how to raise my hand, but can I ask a question? And Ashley, thank you so much for all the great information you shared. I was a large cap, I ran a large cap equity product in my former life, so I can relate to so much of what you were talking about. But you do have your CPA. One of the things that we are encouraging our students to take a look at is the Chartered Financial Analyst designation. Do you have any thoughts on that? Is that something that you plan on pursuing, or do you see any value in getting that designation?
Yeah, that's a great question. I think there's a lot of value in getting that designation. I think there are a lot of people at Wellington who are CFAs. And I guess the thing that's holding me back is because I have an MBA, it's not as imperative because I've had some of the technical training that you learn through studying for the CFA, but there are a number of individuals that have both the CFA and the MBA. So I'm thinking about it. Again, it's a 3-step process, and I've done the CPA, I've done the MBA, the MPA. So I definitely think there's a lot of value in having it. Not only because of the letters that it speaks volumes, but just the amount of information that you learn from just studying for the exam is second to none. You're not going to learn it anywhere else. So I do think it would be a value add. It's just right now, probably just the timing. Or yeah, like I'm still ramping. Been in school for a little while, so I do think that there's a value add to it, though. So I don't have a good answer for why I'm not studying for it right now, though, other than I do have my MBA, so it's not as much of a value add as it would be for someone who hasn't gone through the MBA process, but it still is a value add. So,
Okay.
yeah, okay.
All right. Thank you.
Yeah.
We have some questions coming from the chat. So Ashley, one of the questions, do you have any advice for someone who is just starting out in investments in stock market? I know you talked a little bit about the
Right.
career field, but maybe for those who might not be interested in the field, but just want to learn about stock markets.
Yeah, I would say just reading the books that I mentioned. So there's like different guides as well. So beginner's guide to the stock market. And then those books that I mentioned, I think are super helpful. And then the forums, there's just so many discussions going on in those forums about just what's happening, how to think about stocks. And then at your school, if there's investing groups or just, it doesn't hurt to join in on those conversations and just hear how people are talking about stocks. And there's also a lot of good podcasts that you can listen to that also break down stock specific stuff and industries that are good to invest in. So I would say those like podcast reading, talking to other people who have invested for a while.
Thank you. When you say forums, do you have like any specific type of forums or things that might be beneficial?
Yeah. I would say Seeking Alpha is a really good forum. That one. That's the one that I mainly did. There is like the name is escaping me, the newsletter. It's a value investor newsletter. If I can't remember the name, I could send that off with the books. But I would say Seeking Alpha is where I got a lot of great information when I was starting out. And then Kramer, I mean, he has a podcast. I think that's like, I don't know. It's like, I don't know. I think there's so many podcasts. If you just go on the Apple podcast and just see the Earn Your Leisure is one. I think that they're great. They're super informative. So that's not, there's like YouTubers, but in terms of forums, Seeking Alpha is the one that I'll recommend.
Thank you. And then the next question, how did you seek out networking opportunities while in school or internship opportunities?
Sure. So when I was in school, the main way I sought out networking opportunities was just through the investment management club. And so they provided opportunities for us to meet with other firms. And so I think that was the main way, but then also there are other organizations that you could join. I think Twigo is just at the graduate school level, but I'm sure like I did MLT as well. And they provide opportunities for underrepresented minorities to get in front of these companies. So that was another way in which is joining external organizations in the finance space. So Twigo is specifically for finance, but MLT is for all industries, but they have opportunities to get in front of finance organizations and then attending alumni events as well. So that's actually how I got the role at Wellington is how I got my foot in the door at Wellington is I attended an alumni event at my school, and I came in contact with someone who is a retired partner at a competitor, and I told him what I'm interested in, and then he connected me with someone who's at Wellington, and I got in front of him, and then that's how I got my foot in the door, and that eventually I got my interviews. And so those are good ways, just attending anything that's alumni affiliate or anything at your school, because you never know who you might come in contact with or who might know somebody who would be, a good person to just talk through. And it might not happen right away, but continue to have conversations with them over time, I think pays dividends for the future. So those are, I think, the main ways that you can really get yourself out there.
Absolutely, thank you. Definitely taking advantage of all opportunities that are available. Next question, is there someone in your field that you see as a mentor that has encouraged you to get to where you are today? Especially since you said this wasn't your initial career choice.
Yeah, sure. So when I first got started, I did a few programs, one with Capital Group and another with Fidelity. And so they specifically offered mentorship programs through, or mentors through certain programs to expose underrepresented minorities to opportunities in the investment space. And so through those programs, I was able to be connected with mentors. So that, and then when I started at Wellington, they also assigned me mentors. But I would say if you don't have those kind of opportunities, I would say that the networking also, like, it pays huge dividends. So the guy who I met at an alumni event, like I literally just met him, it was 2019. He's one of my mentors, right? And so it didn't happen if they're not assigned to you. I know initially I was hesitant and a little nervous about asking someone to be my mentor, but it happens, or it can happen organically just through staying in touch and having those repeated conversations, just scheduling time to talk and connect. And so through the networking, I was connected with this individual. And then just through constant, communication, doesn't have to be like, every month, but every quarter, just reaching out and saying, hey, this is where I'm at. Like, what are your thoughts? This, that, and the third. And then eventually evolved into a more organic sort of mentorship relationship. So I would say if you're not in those spaces where you can get mentors assigned to you, then just networking and then fostering that relationship over time, organically, a natural mentorship relationship should be able to blossom out of those relationships.
Thank you. The next question, aside from your love of numbers, what else led you to pursuing a degree in accounting?
And
in accounting?
In accounting. So I, like, early on in life, I honestly, I wanted, this isn't going to be the best answer. In undergrad, I wanted to like live in New York City. I wanted to have a stable career. And I like numbers. So naturally, and I was in a business school. And so naturally, accounting provided that opportunity for me to have a stable career and live where I wanted to live. And so I think those were my priorities. Those were my priorities when I graduated undergrad, right? Was stability and something to do with numbers. Not great, because obviously, like, it didn't work out. I ended up not being as interested in it. And so that's when I decided to pursue something that I am really passionate about. But forensic accounting, I sort of fell into that because I am very curious. So I thought, well, if I'm in accounting and I'm super curious, this seems like a natural fit. Like, I did audit, I wasn't in love with it. So forensic accounting seemed like the best avenue or the best opportunity under the accounting umbrella. And so it was a mix of my curiosity and my love for numbers that led me to do forensic accounting.
I guess this next question kind of leads into that, kind of answered. When is that kind of like when you for sure knew that this was going to be the career that you wanted to go into?
Yeah. So I think accounting is a great career. I think you learn a ton about business, and it's definitely helped in my current role. But when I reached the plateau and I looked at my boss, and like, she loves her job, and just, it depends on what your skill set is and what your interests are. I realized, like, this isn't really what I want to do. I'm not motivated by it anymore. I'm not being challenged. I'm not working with numbers, and I feel like I've gotten into this routine. I'm not really learning as much as I would like to learn on a daily basis. So I knew I wanted to do something different. I didn't know what that looked like though. So it wasn't until the networking, the going to the conference that I learned about the role. And then it wasn't until I was in business school and I was actually doing the competitions and like spending all night working on like reading and working on my pitches that I realized like, okay, if I'm spending all this time, like this is actually fun to me. And this is actually something that I can see myself doing over the long term, the more and more that I did it. And I think my internships also affirmed that passion because I got so much more exposure to the people who are actually doing it. And I could see myself in their shoes long term, right? So it was just doing it and then being exposed to people who do it on a daily basis. And the sort of gratification that I got from that sort of solidified it for me.
Great. Next question, Ashley, have you ever dealt with imposter syndrome at any point in your journey to where you are now? If so, how did you overcome those feelings? So two-part question.
Yeah, all the time. So it started when I got to business school. And so when I went to TWIGO, TWIGO is a conference for underrepresented minorities. So everyone looks like me, right? And so, well, you know, everyone is like Black and brown, or so it. When I initially was interested in it, that was what I saw, right? The person on the panel looked like me. But when I got to school, that wasn't the case. So everybody did not look like me. Not one person looked like me. And there were a lot of people who had come from investment banking or had skills that were more transferable. Like I didn't really know how to model. I knew how financial statements work, but I didn't really know how to build a model. I was really starting fresh. I was very, very green. And so in order to get exposure, like I said, you have to go through the reps. You have to actually do the investing to understand how it works. And so we would have the stock pitch competitions. And I remember first when I wanted to do the stock pitch competition, nobody wanted to be on my team. Like I asked, I put in the chat, like, hey guys, you know, I'm really interested in joining a team. Nobody, crickets, like nobody wanted to be on the team with me. And so yeah, that really like didn't do wonders for my confidence at all. But I had a good mentor at that time that was actually assigned to me through the investment management club, and he had a similar experience, a Black guy, and he was just like, you just have to continue to put yourself out there. You're gonna make mistakes, but over a long run, it'll pay off. And so I ended up finding a team, and then just ended up working super hard and found allies in the club, and eventually ended up like when I got my first internship, then everybody wanted to be my friend at that point. And I guess I'd proven myself, which isn't like a great thing to want to have to be able to do in this space. Like it should be more inclusive, like people should want to support you. But that was just my experience initially. So now coming in full time, again, it's similar in a sense that there are a lot of people who don't look like me, but it's different in that I have the support. So while I'll feel sometimes not as confident speaking up or sharing my opinion, the great thing about Wellington is that people are supportive. People make a point to let you know that they really value your opinion and they want to hear you. And so that is enough for me to be like, okay, well, if you value my opinion, then I'm definitely going to share it, right? And so I think it's those conversations and those people who are really supportive of you that really help me sort of get over my imposter syndrome. But it's still, it happens. Like sometimes I will feel like, I'm not as far along as I should be, or, but it's the relationships that I've built at Wellington, my mentors, my portfolio managers that I work with, that really helped me to overcome that. And that's just by being supportive. So it's important that wherever you go, you have that support system.
So, as Whitney said, they're lost on those people who didn't want to listen or build that connection with you. So yeah, they're lost on that. Mohammed, I do see your question, but I want to ask a follow-up question to the imposter syndrome question about what do you feel like if that wasn't one of the biggest challenges for you, what was kind of like the biggest challenge for you in your career or on your path?
I think it's that. I think it was the feeling excluded. You know, I came into this space from an industry where I was very comfortable and I wasn't getting things wrong. Like I was doing a great job. And then to step into a space where I'm not as educated on or not as well versed as a lot of my peers. And so the confidence was a big thing. It was just, and you have to be confident in this space, or at least you have to appear confident because you're dealing with a lot of money. And so if you want people to trust you, you have to be confident. So it was getting over that imposter syndrome. And again, it comes back. Like I do sometimes feel, and this is, you know, I'm still early in my career, but I would say the biggest thing is just getting over that hurdle and being more confident in myself. Probably, and being comfortable being wrong and leaning into my mistakes and learning from them is probably like the biggest thing for me. It was the biggest thing for me.
Thank you. And then I know you mentioned some of the organization. The question is, were you in any organizations that was related to business that helped you out in school?
Yeah, so I was the main organization that I was in when I was at Wharton was the Investment Management Club. They do have there's a club where you can actually manage money, but I wasn't. You know, a lot of people are coming from investment banking, private equity, and so you have to interview for that. So I wasn't given the opportunity. I interviewed, and unfortunately, didn't make the cut. But those organizations are helpful for a lot of people as well. But for me, the main organization that helped me was just the Investment Management Club. They did a ton. And then MLT, I think I mentioned, and Twigo.
And then another question about the numbers. What was the most money you've managed at once?
Oh, well, so my job, so I don't directly manage, so I help manage. So I'm on a team and I'll make the recommendations to my portfolio manager, and then they'll ultimately decide whether or not they want to act on my recommendation. So we manage $60 billion. And that's our portfolio. So I'm not the portfolio manager. And then, you know, like I manage my personal money, but that's, you know, but on the team, that's how much money we manage.
That's amazing. That made me think, outside of that, do you do any like personal clients, or do you have to automatically, like if someone say, hey, I want assistance with managing the portfolio, do you automatically have to make that a client for Wellington, or can you do some of those things on the side?
Oh yeah, I'm not allowed to give personal investment advice because it's considered like a conflict of interest. So what I say is, you know, we manage money for like Vanguard Dividend Growth Fund is our largest portfolio. So I tell people, you know, if you want my advice, then go invest in my fund. You can go Vanguard. There you go. You can see all my holdings. So yeah, unfortunately, I cannot. It's a conflict of interest. But that's sort of how, you know, I could say, yeah, unfortunately, I can't.
And they say they have to say they want to work with Wellington.
Yeah, so yeah, they'll have to work with, because we'll work directly with institutions and other investment advisors. So they'll have to work with the investment advisors or the consultants to invest in our portfolio, unfortunately. But that's the way around it. So yeah.
And then the next question, have you met any big name CEOs or famous people, if you care to share? I can share.
Yeah, I don't know how much detail I can. So, yes, I've met CEOs of very large companies. So, um, I guess, so yeah, I mean, our portfolio holdings are online, right? So I recently went to Atlanta and met with the CEO of Coke, and we had dinner with the CFO of Home Depot, which was really, really cool. And we have met with more recently, so like the CEO of Pfizer, so we meet with so many different CEOs, CFOs, any public company that you can think of, we probably have met with the CEO, whether or not we hold the name or we don't, right? So we're always just interested in learning more about like companies that are in the space, right? We had consumer conference, and so we've had companies like Procter and Gamble, Dr. Pepper, Clorox, so all those CEOs, like defense companies, just like literally, it's just like it's really cool.
Yeah, that's amazing. That's really cool. And then in terms of diversity, equity, and inclusion, what changes would you like to see in the industry over the near future, maybe within the next 10 years?
Yeah, so our firm is really making a big push for more DE&I. So they're taking on a lot of initiatives with that focus. So last week we actually had an HBC stock pitch competition. So just building the pipeline for more diverse talent, because we're widening the pool of places that investment management firms look at, the schools that they recruit from, is the first step. Because I think traditionally, like, they'll just go to certain schools and then pick people who have like investment banking experience or who've been investing since they've been 5, right? And when I would be in certain spaces or interviews, there'd be people talking about how they were having conversations at the dinner table about investing, and I wasn't. And so that's sort of what the spaces look like people who have been bred to be in this space. And so it's realizing that, and then widening the pool of places you look for. So partnering with organizations like MLT and Swigo, I think, are important, and then having these stock pitch competitions that are open to other places other than like traditional schools. So I think those are important initiatives. More things, more opportunities to do or have conversations like this, I think, are important to increasing diversity. But I also think that Wellington is doing more than our peers, which is great about Wellington, but not great about the industry. And I think that other companies can learn from what Wellington is doing. So I think it starts from just shifting their strategy and being more open-minded about, maybe that means if you recruit someone who hasn't had the traditional finance experience, just providing the tools to level the playing field, right? So I think that's the first step. And then the great thing about Wellington also is they'll loop me in and other underrepresented employees and just ask for our advice on how to improve the DE&I efforts at the firm. I think if other firms aren't doing that, then they need to start. So I would say that those are some things.
Thank you very much. Any other additional questions from the students? Or anyone, professional staff? Questions?
I do have one other question I'd like to ask. So Ashley, because you are a global company, do you have plans of traveling to Singapore or some of those other exotic locations to interact with the Wellington employees there?
Yeah, so not Singapore, but London.
Okay.
So another analyst on my team he just moved to London. And so I'm gonna go to London probably this summer, but we're planning on doing company visits in Switzerland. So probably get to go to Switzerland with them, even though I don't cover global companies, but I still help a manager that does invest in global names. So I'll be able to participate in that
Nice.
in that trip.
Very nice.
Any other additional questions? People are asking for coffee from Switzerland. But Ashley, any final thoughts or things at all?
No, just if you're interested in investing, just start now. Just read a book or start that paper portfolio, or if you can get a Robinhood account. Yeah, just and if you do encounter setbacks, just keep going. So.
Mm-hmm.
Well, we can give her a virtual hand applause for her. Thank you so much.
Yes.
For all the great information. I think it was very beneficial. Great insight. I learned a lot myself. Just trying to learn a little bit more about investing. So thank you again very much. Donna, any thoughts?
No, just thanks again to Ashley. You were our inaugural speaker for this series and you've set the tone. So we're going to be looking for people to measure up to share the great advice that you did for our students. And thank you. I really appreciate it.
Yeah, no, thank you. It's been great.
So yeah, I'll talk with Donna about getting you my email or information so we can get the list of books and maybe some of those podcasts or forums that you mentioned so we can get those out to students. Would it be okay to share your contact information with students if they had any follow-up questions or anything?
Yeah, definitely. Definitely.
Perfect. Okay. Thank you so much. You all have a good day.
All right. Thank you. Bye-bye, everybody.